Hi, welcome to the Weekend Investing Daily Byte. It is May 25th. Let's look at the markets, and we will be looking at a very different kind of a topic today, but we'll come to that in a while. On the markets were very lackluster. In fact, there was a nice dip in the middle, but regained back some of the lost ground. Nifty Next 50 took the most of the beating in terms of the indices. The rest were reasonably flat. The sectors that were running in the morning were metals and IT, but metals gave up most of the gains by afternoon, still ended in green. IT was the leader, and PSU banks and banking in general were lagging the market. Bank Nifty, in fact, fell 0.8% today. Not much of any major action in the markets. In terms of the small case performances of weekend investing, NNF 10 took a beating, down 1.36%, and most of the others were within 0.5% range. Again, a very lackluster day for most of the strategies. For the financial year so far, we are having three strategies which are above 20%. So the going has been reasonably good there. I had a tweet uh, broadcasted this morning, which was a Peter Lynch video on. It's a 1997 video. Beautiful learnings in this video. So I would recommend go ahead and spend 20 minutes watching this video, which is there on my Twitter feed. So we will basically use this as an anchor and try to see the learnings in the Indian context. And of course, the learnings of the stock market remain the same whether they are any markets or any time period. I mean, nothing really changes in the markets in terms of human psychology and the market behavior. So my sense is that we need to learn not how to lose the money exactly, but we need to know how money gets lost in the market. So unless we know how money gets lost in the market, we will not be able to avoid those pitfalls. And this daily bite and several others that I am planning will focus on these common ways in which we tend to lose money while playing the market. So one of the great strategies to lose money is to buy a stock because it is going down. Now, there may be a lot of controversy in terms of my suggesting that, because 98% of the market buys stocks when they are down. But the way I look at the market, especially from a momentum perspective, is that I don't want to buy anything that is going down. It is as simple as that. The stock needs to be going up for me to get interested in that stock. It need not be at 52-week high or all-time high, but it needs at least needs to be going up. Why should I buy a falling knife and drive and hurt myself? So the common mechanism how most people lose money, and whatever I say here is basically there are exceptions to the rule. A lot many people make a lot of money with stocks at the rock bottom, so don't take this as gospel of any kind, but these are in general how people lose money. So, stock XYZ gone down by 60%, 70%, 80%. Now it's a great buy. It's a value buy. It will go back to the point where it has come from, even though at 80% down, you have to go 5x to reach that point. But that's fine, because the narrative is set in such a way that this is just a short-term fall, and very quickly as the market recovers, or as the speculation in this particular, somebody has bear hammered it down, or there'll be stories like this is just a small blip, just one quarter of bad news, and then the next quarter it will go back again, and let me buy this, and let me also buy, make all my friends and family also buy this, and we'll really get rich very soon. And you and me know that we've seen ton of examples of this kind in just the last few years only. Let's take some examples. Today we'll just go through some charts. So Cafe Coffee Day, it crashed from a high of 360 down to about, I think, somewhere close to 15 or 20 rupees. And it major chunk of people were buying the stock here, after it crashed, that, this is just a small blip, cafe coffee day, huge chain, what could go wrong. But even from here, from 80 rupees, people lost about 80% of the capital in the next 6 months or 8 months. It may revive, that's a different equation, but why would you want to make yourself go through that pain and trying to pick that bottom, right? So this is just one example. Divan housing, I remember the day when this was crashing here, and below 500 odd rupees there was a huge technical breakdown of the stock. But of course, because it had been at 500 600 range for a long time and big investors were in the stock, nobody was willing to believe at 500 that this could go to 400, this would go to 300, this would go to 200. And at every level people were averaging, people were buying. And even if you bought it after, let's say, a 90% drop, you would have still bought it at like 70 80 rupees and have still lost another 70 80% of your capital. And there is no sign of any revival here, at least so far. So while you are losing capital here, you are also losing the opportunity of the raging bull market that is happening right now. So why get into stocks which can ruin your portfolio, and also not give you the opportunity of making money on the upside in other stocks which are actually going up. So you are getting hit by a double whammy, actually, of sorts. Everybody's favorite Yes Bank started dropping from 380 400 rupees level, stabilized somewhat near 200 when the new CEO etc. came in. Then again started crashing. So there were many points. There was a point near 280 where it was a clear sell, and there was a point near 160 180 when it was a clear sell technically also. And so even after 70 80% drop from the top, let's say around 100 rupees or 60 rupees, there also people put in lot of capital that this is a bank and this where this will go and so on and so forth. But you have to see the equity base, you have to see the earnings. Just because it has gone from 400 to 60 does not mean it can go from 60 to 400 in the next 1 year or so. So basically what we have seen here, despite everything getting taken care of, despite the white knight state bank coming in, nothing has happened. Nothing has happened. All kinds of NPAs have been taken out, or more capital has been brought in. So far, nothing. Right? So you would have wasted your entire capital here and the time to do so. Suzlon, another long-term favorite, 2008-9, it went to 400 rupees. This is all adjusted post their face value split, etc. 400 rupees, it crashed within less than a year to about 60 or 80 rupees. So again, 85% drop here or 90% drop here. And a ton of people bought here and have been buying all through. It's been a decade, more than that actually, 12 years, no returns virtually. Yes, you may have picked it at 3 rupees and now it is at 5, but I'm not looking at that kind of a positional short-term trade. So this is basically how capital gets annihilated in portfolios, and few such stocks can ruin your entire portfolio basically. So we need to stay away from these kind of. So another type of view I wanted to give you was like sale went from 230 to down to 20 rupees over a span of 10 years. Again, 90% drop. But from there, it has now gone up almost 6 times. So yes, there is some revival. But just imagine yourself sitting through 12 13 years of pain, not seeing your entry price, waiting for the next cycle to come. You could have used your capital effectively in other ways and not have that pain. The main thing is you could have been positive about your stock pick or your selection instead of being biased and holding on to that grudge that no, I will make money off this only. So don't do that. And these are short ways. And there is some study, I'm forgetting the name of the study, but there is some study that on an average, if the stock has dropped more than 80-85%, the probability of it reviving is very, very low. There is a statistical study on this also. So while exceptions are always there, and there will be fantastic, sort of hidden gems, value buys kind of things that will happen once in a while. But more or less, if a stock is dropping 80-90%, you should be having your, antennas up. Why the hell has this dropped 80-90%? What has gone wrong? Right? Something has gone wrong. That is why it is down 80-90%. Otherwise, no stock drops 80-90%, just like that. So all these are thoughts that you can, have before you buy anything. So I also had this tweet today, which says that, when we're looking on a chart and we say, okay, 10 years drawdown, and then we'll go back up again, the time feels small, is short. So you could feel that you bought and held, and 80% drop, no problem, I would have gone back in the next decade or so, something like that. In real life, living that 10 years, living that 8 years is very difficult. As soon as some respectable level would come, a person may get out of frustration. Okay, I've seen 80% drop, now it's at -50, let me get out now. So you wasted another 10 years doing that. So get real, and get basically behind sound strategies which can generate good returns and give you less pain, which is most important. So at Weekend Investing, what we do essentially is we chase stocks which are moving up. So there is no question of getting stocks which are moving down. So if a stock is below 200, probably it will not come in any of our filters, any of our strategies. If the rate of change, let's say the last 1 year rate of change is negative, we'll probably never have that stock in our portfolio. So these are sort of automatic ways in which we will avoid all these knives which are falling. And even if we get some, we will get out of them quickly. So similarly, you can add these kind of tools in your arsenal, and protect your portfolio and your peace of mind, and do some good investing. So this is all I had for today's video. If you like this video, let me know in the comments below. And there's a Telegram link in the description. Please go there. We are holding a webinar this coming Saturday, where we are inviting the technical team from Smallcase to come and resolve each and every query that you may have while using Smallcase. So you please go to that Telegram channel, and you'll find a form there. And if you fill that, we'll try to get as many questions resolved as possible. Let me know more ideas about the daily bytes and what you like or what you don't like about it. We are all ears for that. So have a good day and goodbye.